day, a new dawn, another opportunity to have current and relevant business conversations, and it only happens here on Business Morning on Channels Television. I'm Ini John Mekwa. Let's get right to it. Oil prices retreated slightly on Thursday after gaining more than $3 in the prior session, with a strong dollar capping oil demand from buyers using other currencies, and also concerns over the faltering economic outlook clouding market sentiment. Brent crude futures fell 59 cents to $88.73 a barrel, while U.S. crude futures fell 54 cents to $81.59 a barrel. Both benchmarks rebounded in the prior two sessions amid volatile trade after reaching 9-month lows this week. The dollar trended upward on Thursday morning after hitting a fresh two-decade peak against the basket of currencies on Wednesday before pulling back. A strong dollar reduces demand for oil by making it more expensive for buyers using other currencies. The Bank of England says it is committed to buying as many long-dated government bonds, known as gilts, as needed between Wednesday and October the 14th, and that's to stabilize currency after the British government's budgetary plans announced last week caused the sterling to tumble. In the commodity space, Malaysian palm oil futures rose on Thursday after plunging to a near 20-month low in the previous session, with gains in rival Dalian and Chicago soy oil underpinning the market. The benchmark palm oil contract for December delivery on the Boston Malaysian Derivatives Exchange jumped 130 ringgit, and that's about 4.03% to 356 ringgit per ton in early trade. The contract fell by more than 17% in the previous 5 sessions of losses. Dalian's most active soy oil contract rose 0.59%, while its palm oil contract slid 0.81%. Soy oil prices on the Chicago Board of Trade gained 0.80%. Palm oil is affected by price movements in related oils as they compete for a share in the global vegetable oils market. And staying in the commodities market for wheat now, Chicago wheat futures edged lower today as investors took a breather after more than 3% jump in the previous session, and concerns over the Russia-Ukraine war and adverse weather in key exporting countries. Corn and soybean prices slid. Ukraine's president has concerns that Russia will impede grain inflows from his nation after November amplified the price gains on Wednesday. The most active wheat contract on the Chicago Board of Trade lost 0.1% to $9.02 half a bushel. Well, our global economy is losing nearly $1 trillion annually, and that's because of the impact of depression and anxiety at workplaces. This affects about 12 billion workdays, and that's according to a new report by the World Health Organization and the International Labour Congress. In a joint policy brief released, the 2 UN agencies mentioned that governments around the world spent an average of just 2% of health budgets on mental health, with lower and middle-income countries investing less than 1% in 2020. Both international bodies have launched 2 publications which aims to prevent negative work situations and cultures, while also offering mental health protection and support for employees. Meanwhile, the ILO and the WHO are calling for concrete actions to address mental health concerns for the world's working population. And a total of 3.7 trillion naira worth of loans has so far been recovered by the Central Bank of Nigeria following its intervention of 9 trillion naira to the real sector. Speaking with reporters at Abuja, the Federal Capital Territory, the director in charge of development finance at the Central Bank, Mr. Yusuf Iyila, explains that while the manufacturing sector got a larger share of 31%, the Apex Bank is working in collaboration with the Economic and Financial Crimes Commission to recover loans from debtors.
One of our best performing interventions is the Commercial Agri-Credit Scheme, CACS, of which we've lent around 800 and something billion, and almost 700 billion has come back. But there's also a primary production element, which is the anchor borrower program. So we've lent out 1 trillion for the anchor borrower program, of which we've gotten close to 400 billion back. Some of it, yes, are to smallholder farmers. Every single person who's taking that loan, smallholder farmer, is going to pay. We have his BVN. We are going to be, in fact, we've started what you call the Global Standing Instruction, the GSI. It will continue to pull the accounts in the banks that they lend through, or whichever bank that they have accounts. And anytime we see any funds, we'll recover that. We've also started recovering loans from state governments. We have been doing a loan workout program from them, and we're debiting their FAC directly, for the loans. So if a state government has taken 1 billion and it's already in default, over a 6-month period, we're going to be debiting them 150 million every month. So we started that program. So every single loan that has been given out through any of our intervention programs must be paid back. There's absolutely no mercy. Finally, we're working with EFCC. The governor has approved for ourselves and EFCC to set up a desk to help us recover the loans where we're at risk.
Now this is more like it, right? We want the best quality ingredients when we cook. When it comes to salt, we care less. We say salt is salt. Well, I care about my salt. It goes into my food and my body. And that's why I use Dangote salt. It's time to care about your salt.
It's Commodities time, and having this discussion this morning is the Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Ruwani, coming in himself this morning. Mr. Ruwani, good to see you. Good morning. Been a while on Business Morning.
Good morning, and thanks for having me.
All right, so we see the price of oil very volatile, going, obviously the opposite way with the dollar. In fact, let's even find out what's making the dollar surge. We know that the Federal Reserve hikes rates, and then, of course, it reacted to that. But even after that, we've seen it tapered just, I think, 2 days ago a bit, and now it's back to a 20-year high. What's going on in that space?
Yes, actually, what the world is witnessing today is dollar strengthening and other currencies weakening at the same time, simultaneously. Why is this? There are 2 fundamental reasons. One, the American trade deficit has been virtually almost corrected in terms of its trend, but also the United States is one of the Western countries that does not depend on Russian gas. So the cost of living crisis that you find in Western Europe and other countries is not directly impacting the United States. The United States was most aggressive in increasing its interest rate. They've done 3 shots of 75 basis points at the right time. So you are now beginning to see the impact. The cumulative effect of this on the strength of the dollar is that the dollar has now become relatively strong compared to its trading partners. On the other hand, a country like the United Kingdom has embarked on a self-inflicted wound. There was Brexit, there was a change of government between Boris and Liz Truss, and now there's this whole idea, what is now described in economic cycles as zombie economics. In the past, we had what we call voodoo economics by the supply side people during the time of Reagan. Now it's being called zombie economics. So in a nutshell, there is dollar strengthening and other currency weakening, and how it affects Nigeria we'll talk about in a minute.
Exactly. That was my next question. I do know, of course, the surging price of oil means more subsidy for us. So do we see this as one-way good news, even though on the other way, a surging dollar also affects us negatively?
No, first and foremost, there's an inverse relationship between the value of the dollar and the price of commodities. So once the dollar strengthens, commodity prices come down. But on the other hand, and the opening you talked about, $88 a barrel being the Brent contract price right now. But think back, last quarter, or actually the early part of this quarter, the average price of oil peaked at $127. So essentially from the peak this quarter to where it is now, it has lost $42 a barrel. For Nigeria, that's bad for our revenue. On top of that, Nigeria is not producing. I think it's today we've seen that the rig count has dropped by 30% in Nigeria. It means production activities have actually dropped. So in other words, what I'm saying is that oil revenues have dropped, your diaspora inflows have disappeared, and it's having a direct impact on the Naira, which this morning is trading at 733 in the parallel market.
And our external reserve also keeps dropping. I think the last one dropped by 0.05%.
No, that's not a massive drop. Actually, the external reserves I'm talking about is what we call 30-day moving average gross external reserves. What is important to the country is the net external reserves. That figure has not been published for a long time, so we cannot speculate on what the actual amount of reserves are there to defend the currency. But based on what we see and what's published, the reserves are robust and strong enough. So the question is that why is the Naira falling? How much of it is because the dollar is strengthening? How much of it is because we have structural problems here to deal with our foreign exchange market? That is the question that is on everybody's lips. And guess what? Inflation in Nigeria is about almost 72-73% caused by exchange rate pass-through. So if you do not fix the exchange rate formula well enough and in good time, you want to continue to have inflation. And inflation now at 20.54 is actually twice the level of the central bank. The central bank target is 6 to 9. So if you double 9, you get 18. It is 400 basis points higher than the higher than the doubling of the central bank range. So in other words, it is almost 14% higher than what the central bank can accept. And what is important here is to note that interest rates are still very much lower than where the inflation rate is right now. When I talk about interest rate, I'm talking about the treasury rates and the savings rates.
Okay, so you did say that when we talk about inflation that we can connect it to the FX issues. So do you think that this hike in the interest rate in the MPC, is it going to, and the CRR, they're supposed to mop up excess liquidity from the economy. Do you see it solving the inflation issue?
Partially, but not. You said that, but you have to ask yourself, how much of this inflation is caused by money supply saturation? Not that much. When we did the analysis, it came to almost 5 to 6%. But to the extent that excess liquidity weakens the currency, you can say indirectly it has an effect. But I think it's much more structural than that. When you have inflation, which is where the core inflation is actually increasing, food inflation is increasing, and you cannot use one bullet to shoot it. What needs to be done immediately is to ensure that interest rates move, the exchange rate, the I&A window moves, you put more foreign exchange in the market, and then gradually the market begins to have confidence and prices begin to come down. Right now it's not working. But let me, whilst we're on it, the diversification of the economy away from oil and monoproduct dependence has to be taken very seriously. And this is the World Tourism Week, or World Tourism Day, actually. We had it in Benin City 2 days ago. And one must commend the initiative of Governor Godwin Obaseki for what they're doing in trying to commit thin resources from the thin budget they have, trying to commit total resources towards starting a tourism initiative that will bring in tourists into this country and make Edo State the epicenter of tourism for West Africa. Those kind of initiatives, if followed through across the country, will help to diversify the economy away from oil. But that's not the issue. The issue today is that what is happening to inflation? First, the most important measure here is that what is the price of cooking gas today, and what was it 4 weeks ago? Cooking gas cylinder was down to 8,000. Today, I understand it's 10,500, right? And you know that. What was the price of vegetable oil 4 weeks ago? What was the price of sardine 4 or 5 weeks ago? When you look at this, and you now see that prices are increasing irrespective of whether interest rates have increased. then you begin to ask yourself, why is this happening and how long can it last? Because Christmas is only about 12 weeks away. 12 weeks away.
Yeah, you know, I also noticed you talked about the non-oil exports and you mentioned tourism. And of course, obviously, you have noted that this hike in MPC may not capture or deal with a large part of the inflation. So we have to look for other solutions, which if we have food inflation, which would mean, can we get more food domestic from the domestic front instead of importing it? So we go back to our structural issues, which many have said that's what is majorly driving the inflation that we have in the country. So we have to deal with the issue of insecurity. We have to deal with the FX issue if we really want to deal with this inflation.
Yes, but you see, the other factor which I've not mentioned today is the price of diesel. Diesel came down to about 740 naira a litre a few weeks ago. It's back to 800, 810. So yes, the national grid, we are having grid collapses and all that. But the moment the price of diesel goes up, that is the second biggest driver of inflation in the country, because it is due to power trucks. It's used to give alternative energy. And with cooking gas the way it is, the price of kerosene the way it is, people don't eat cold food. They need to at least warm their food or cook it. We don't eat. Our food has to be cooked. African food has to be cooked. Therefore, the cooking energy, that is cooking gas, kerosene, electricity, are very critical. When you see the price of these commodities, energy-related commodities, increase the way it has increased in the last 4 or 5 weeks, it tells you that something fundamental is happening. So inflation has a structural bit. It also has its current bit. So what you are seeing today is the structural inflationary bottlenecks that are there that you need to deal with, and dealing with the current things. Now, again, we are 150 days away or 145 days away from an election. So the question is, what's going to happen next? And what's going to happen this Christmas? All right? So we have to deal with this and deal with the prices, because looking at, normally at this time of the year, because of the harvests, we have to begin to see prices come down. We've seen the price of new yam come down, but the price of many other commodities that will be declining at this time have not actually declined to as well. So again, our projection before was that the rate of inflation in September will be down to about 19.7, 19.8. But we are looking at this again, and we'll come up with a new projection. We may not be as lucky as we thought we will be in our last projections.
Yeah, but Mr. Rwanda, do you see us, Nigeria, taking care of this issue now? Because, I mean, campaigns have started. They started yesterday. Politicians are busy. Those in power, those who are looking to get into power. So it looks like the economy may just be at the back at this time, and we might just see inflation just surging. Who's giving attention to this?
No, not at all. In fact, the economy is, like Bill Clinton said many years ago, the economy is stupid. The economy is the major factor in this election. People are either, if the economy continues to decline, they will vote out of anger. If the economy begins to improve gradually, they will vote with some form of enthusiasm. So the question is, are you voting because you're angry? Are you voting because you're enthusiastic? Or are you indifferent, in which case, I don't care what happens to me. No matter who gets there, my situation will never improve. Those are the three categories of voters that you have. So politicians know that the economy is the most important thing. A hungry man is an angry man. An angry man is likely to either vote, protest, or riot. We don't want any of that. So a lot of work is going on to ensure that the economy stabilizes. But again, we plan, we hope, but in the end, the markets always discipline us. The markets are telling us.
Yeah, the markets always discipline us. Just as we see wheat soaring this morning, I thought with the wheat coming out of Ukraine through the Black Sea, we've had it taper for a bit. I don't know, what's the threat now?
Okay, let me tell you what it is. You see, there's inflation and there's inflation expectations. The fact that Vladimir Putin is becoming, what I can say, mostly very unpredictable, and people are beginning to have fears about his mental stability at this point in time. We do not know whether he can actually go into the nuclear mode or resort to nuclear And that is dangerous. So because there's a fear that there's an escalation in Ukraine, the markets, the wheat futures, have actually surged back to where it was. And it's feeding its way back. And let us see how that affects you in Nigeria. Firstly, 2 months ago, the price of wheat was about 26,000. Today, it's up to 28,000. The loaf of bread has gone all the way from almost up to 1,100 naira for a loaf.
Yeah.
That loaf was 650 because of two things. One, the price of wheat. Two, the price of sugar. And three, the price of diesel, because you need to bake this bread. So it's important to see wheat in the context of its international context. But you must also look at it, how it affects you. Because you need that loaf of bread, you need that chinchy, you need that puff, you need that donut. All of these things come out of flour. Flour, sugar, margarine, baking powder. And that's how it affects you. So once the Ukraine war, it's winter, that's when the Ukraine war is bound to escalate. You will see that the price of wheat will increase. For Nigerians, it's just not only the price of wheat, it's the exchange rate at which they bring the wheat into. And so if those wheat millers cannot get the foreign exchange and they're buying it at 733 or 750, then you begin to see that you cannot afford bread. And those guys who cannot afford bread are not likely to go out to rallies and carrying banners for anybody. If they go out to rallies, those are rented crowds. Right now, we have to deal with the fundamental issues of what we call kitchen table issues, where people have to talk about their gari, their moi, their yams, their tomatoes, their pepper, and their bread. That is what it is all about.
Yeah, and talking about those, I know you mentioned the price of new yam reducing a bit at this time. It's harvest time. What's going on with other commodities?
Yes, what we've seen is actually there was a decline in some of the commodity prices, but then we saw a hardening. So we are beginning to see hardening. Rice is hardening. Of course, you know, Christmas is only 12 weeks away. So we're seeing rice harden at about 33,000. I referred earlier on to cooking gas and vegetable oil, which has actually increased. We have seen tomatoes actually decline, and you can see that palm oil is down to 20,000, and new yams are down. Otherwise, you'll find that sugar is up, and semovita is up, which is all flour related. So essentially, I told you the projection before, our projection was that inflation begins to taper in the month of September. But we need to cross-check that again to see whether that will happen because of this new surge in prices. So if at worst case, we'll probably still remain at 20.5, but we will have to come back to Nigerians to say this is what our forecast is. But definitely, everybody is hurting. Prices are getting to everybody now. And with the price of diesel, the price of forex price, imported commodities, and basically everything, because of security, even when you produce, you cannot get those food to the urban areas through the market. So there's a domestic logistics cost, and there's a global logistic disruption. When you put all of this together, it's a perfect storm. But let me say something, that the inflation problem, and these are not Nigeria-specific problems. In Ghana, we have inflation now at about 33-34%. Of course, the UK, you have seen what's happening there. The US is one of the few economies where inflation is decelerating, but not as much as is expected. In all cases, the Federal Reserve, the Bank of England, the ECB, everybody are increasing interest rates sharp. As a matter of fact, we are one of the top 4 African countries that have done more than 300 basis points in the last 6 months. The cumulative increase in interest rates in Nigeria is more than, in the last 6 months, is more than what was done in 20 years. So I want you to take that into consideration. Okay?
All right, Mr. Bismarck-Rani, thank you so much for x-raying those issues for us and giving us a little bit of picture of what we could expect in the nearest future. Enjoy the rest of your day.
Thank you very much for having me.
All right, let's take a break. When we come back from that break, Mr. Rani mentioned the issue of non-oil exports from the country. How do you do that? Through the ports. We've gotten stories of congestion and hurdles in exports through our ports. But we'll delve into that after the break, so you want to join us in just a minute. This is Business Morning on Channels Television. welcome back. Well, the federal government has identified encumbrances to achieving ease of doing business at the port, to include cumbersome clearing process, numerous agencies of government involved in clearance process, among others. Well, putting words into action, the Vice President, Professor Yemi Osinbajo, signed an executive order in 2017, pruning down the number of agencies at the nation's seaports from 11 to 7. In spite of this, Nigeria has gone down the ladder in the World Bank ranking of countries in the ease of doing business. And we also have reports that the customs port that's used for clearing has also been stopped or having some hitches. Well, let's get first-hand information from the acting national president, Association of Nigerian Licensed Customs Agents, Dr. Kaide Farinto, joining us from Owerri. I think he's having a bit of issues. That's why we may not see him in video. Dr. Farinto is off at the World Maritime Day taking place in Imo State. Good morning, Dr. Farinto. Thank you so much for taking time out from your conference to speak with us this morning.
Yes, good morning. The minister just came in, so I had to just excuse her. Good morning. How are you?
Great. Good to have you.
Happy International Maritime Organization Day.
Yeah, you can say that again, Mr. Dr. Farrington. But I mean, the whole essence of celebrating the Maritime Day is for things to work. It's not just about the conference. So about 3 weeks ago, you were quoted to have said that over 40 billion naira demurrage and storage charges have been accrued by importers and clearing agents because of the suspension of the customs service portal. What's the situation now?
Well, it's been restored, and that's why the National Assembly, the Customs Committee on the National Committee on Customs and the National Assembly invited stakeholders to look at the issue of web fronting. Web fronting is the agency or the company that is actually providing support to federal government, to Nigerian Customs Service. And they have been giving us epilepsy service in the last few years. So as a result of that, there was a public hearing last 2 weeks. But the CBM was not available, so it has been rescheduled. It's supposed to happen today, but because of IMO, I was duly informed that it will be rescheduled for next week. So I want to tell you that a lot of consignments are actually trapped in the port due to many reasons. Nigerian government has its own faults. Nigerian Customs Service has many faults. The various federal government agencies too are also adding most of this clog in the, making it difficult for freight forwarders to get their cargoes and deliver to the importer. So there are too many reasons and factors that actually necessitate this.
All right, Dr. Farinto. I mean, it's kind of noisy out there. It seems we may not be able to get a lot of conversation, but tell us about the conference there at the World Maritime Day. What are the expectations? What are the outlines? What do you hope to leave the event with at the end of the day?
Yeah, for the first time, we're having a Minister of Transportation who actually rose through the rank, having been the DG of NIWA about 3 years ago. And so he has garnered experience. So we are looking at a situation where he will give us the blueprint on how we should expect in the maritime industry, particularly moving the maritime industry forward. Do not forget, I told you the last time we met that there are too many factors that need to be put in place. Nigerian government should be having a part of what is called Port Developmental Plan. The maritime industry itself is a very big industry under the Ministry of Transportation. What is government doing to actually tap most of the untapped areas in the industry? However, the most important thing that is important to the industry is the cargo itself. How are we ready to defend this cargo? How are we protecting this cargo? The importer that is bringing this consignment, what are the incentives that are there for them? Most of the somersaulting policy from the federal government and the lackadaisical attitude of the federal government, how ready is the government, how ready are they to tackle some of these problems? I will expect the Minister of Transport to tell us some of this and how we're going to surmount most of these challenges. We're also going to look at the issue of the role of custom. The role of custom everywhere in the world is supposed to actually generate revenue, facilitate trade, and make sure they also protect the national security. Have we been doing well? We have not been doing well in that area. The government is only interested in revenue. having been given targets to our customs, and we have petitioned the issue of trade facilitation, and that is not too good for us. The logistics, the LPI of the World Bank actually talk about predictability. As I talk to you now, you cannot predict when your consignment, if it's laden in the port, when it will leave the port. Just because there are too many excesses on the part of the customs we appropriate and reprobate. These are many challenges that we have in the industry. We also have the issue of security agencies, particularly regulatory agencies, now trying to turn themselves to revenue generatory agencies. The Honorable Minister of Transportation will also address us on this area and tell us what is the way forward.
All right, Dr. Farrington, we will expect to have a conversation with you. I hope you can make out that time when you're done with that conference and tell us if these expectations that you have for the conference are met at the end of the day. But hopefully we'll have you in the studio, at least virtually, in a calmer environment very soon.
It's okay, ma'am. Okay.
Have a safe trip back to Lagos. All right.
Thank you.
Okay, so let's head to the markets now, and I think I can have a little bit of laugh against Will's will. Against Will's will.
We expected this, but yeah, they gave you some form of relief. Just be happy. Celebrate your small wins. Celebrate the wins. Celebrate the wins.
It's 2 wins in this week.
Yes, you got lucky. You got lucky. Anyways, the domestic equities markets traded marginally higher yesterday. We saw buying interest in Boa Cement, and that triggered the all-share index to rise by 0.02%. All-share index to settle at 49,171 points. The market cap is at 26.531 trillion naira, and now accordingly we see month-to-date and the year-to-date returning settling at 1.3. Month-to-date still at the negative 1.3, but year-to-date still hanging at 15%. Now total volume of trades declined yesterday by about 50%, so to 101.57 million units are valued at almost 1.2 billion naira there, and deals worth 3,981. We're seeing GTCO topping trades by volume and value yesterday. A lot of investors, a lot of sell pressure on that stock yesterday, and that also drove the index down. Now, if we look at the sectors, we'll see that the banking sector was down yesterday by over 1%. GTCO was one of the stocks that brought that sector down. Zenith Bank was there, Access Bank. Consumer goods also was down. International breweries was one, the corporate there. We saw industrial goods up 1.1%. Boa Cement, because investors had a lot of buy interest in that stock yesterday. Insurance was down 0.05%. Coronation Insurance was one of the corporates that led the sector down. Oil and gas, Adoba did the magic there. Now we look at market bright, it's still a negative sentiment in the market space there. And investors, we saw 18 stocks losing compared to 7 gainers. We have Abdul Rashid Momo, is a trader at TRW Stockbrokers, to give us more insight, a deeper dive into what's happening in the markets. Good morning, Abdul Rashid.
Good morning. Can you hear me?
Yeah, I can hear you loud and clear, Abdul Rashid.
Okay.
Now, Abdul Rashid, we've had just 2 positive closes this week, and it seems a bit wobbly. I was talking with Ini and talking about 2 wins. We're wondering, what is the fate of equities now, especially after the surprise rate hike by the CBN Monetary Policy Committee? Do you see a flight from stocks?
Yeah, okay. Basically, what I always tell people one thing, that the stock market is a discounting mechanism, right? Not a feedback mechanism. Most of these things have already been priced in beforehand, right? Okay. So basically, yesterday, when that announcement came, it came in after trading. Yesterday, we were expecting some major sell-offs, which actually happened within intraday, but they were recovery at the end of the day. So for now, most of those things have actually been priced in. And if you see what market actually did, we actually saw the market going back up yesterday. But basically, that doesn't mean that the bull trend has not started, but the kind of spikes we're actually expecting is not what we are seeing now. And basically, what we should be looking at will be the next set of support levels. How strong are the next set of support levels going to hold for the market? let me give you an example. I think market did some lows. A lot of stocks actually dropped in the month of August before recovering in September. And those lows so far in August, we saw stocks like Zenith in around 1890, GTCO were within those axes. I think there are a lot of stocks that we within that axis of August, which have not been met. So those are the critical areas we'll be watching for now. How will market be able to hold within those levels? If the market holds within those levels, then we are good to go. If not, then we might see more slides towards the downside.
So let's talking of slides. We're seeing slides in the banking index now, 1.01%. That's what we had yesterday. GTCO closed at about 18 naira yesterday. I think it closed 18 naira, and Zenith Bank closed 19 naira 90 kobo. Now we're seeing the new lows for those stocks. Are we breaking the support level or the resistance level for those stocks already?
For me, as I said, like for Zenith, the low for September was actually 1950, and for August was 1890. So far, what happened is that when the bears are coming very strong, because what happens is that you will still be bulls from Zenith did from 1950 to about 29.45 kobo, and in one day, so I'm talking about 6 or 7 days rally in one day, the bears takes in all the gains in just one swoop. So basically, when the bears are the bulls are suffering, but the bears are still having issues trying to take over the market. So for now, what I believe is that we need to watch those support levels. Those are the very important levels we need to watch so far. Very, very strong.
So what are the support? What are the support levels for GTCO and Zenith Bank? Is access core?
Okay,
a lot of people are looking at access.
Zenith, we're looking at about 1950. Worst case scenario is 1890, the one we need for August. You understand? Then GTCO is within a very strong support level, about 1755. But I think they are likely going to mark down tomorrow. So down is going to test how strong this current support is going to be for GTCO. If you look at even stocks like Access Corp is fighting about 8 naira. And worst case scenario, that was in about 2021. But what I'm looking at, we're looking at about 2022. So will stocks like Access Corp go below 8 naira? These are strong support levels we need to watch. As long as those levels are not broken, I think the bulls are still fighting. I know 9 months, September, we call it more of window dressing period. We might be shocked to see market turnarounds, or what I'm saying is that because if you check out some of the stocks now as we trade, we have more bulls than bears now in the market as we speak now, but not in large volumes. But it shows that investors are finding it comfortable to buy at these current levels. So perhaps during the day, afternoon trading, we might see if there's a change. But so far, for now, as we speak, we are seeing more buys in the market now in some of the stocks.
You talked about more bulls than bears in the market. Now, you know that the CBN raised interest rate to 15.5%, and that automatically raised savings for banks. I mean, for customers, for customers who deposit money in the banks to more than 4% that we already have. Do you see customers or investors now moving to the fixed income space, saying that they're going to be having a higher yield? And we looked at the Treasury bill auction that happened yesterday. Yields at the long end, the stop rate was at 12%. The short end and the mid end also saw hikes. What are we seeing there? Are investors going to move to the fixed income space? And you're talking about more bulls than bears. I want to understand it better.
No, what I'm saying is that, you see, basically, there has even been a shift from the from the stock market, from what we see, because we've not been seeing large volumes from day one. I mean, from the period of about August, there has been a shift. But see, at times when you look at that, there are some people that, as I always said, there are always two players in the market at any point in time. We always have the traders and the investors. You understand? So why I'm saying that, because even as market is now, there are some stocks that, as they are hitting support levels, you will see that we have more of the buyers than these sellers. Investors at any point in time, every stock must have a particular price in which you will see more inflows going in. So as we speak now, as long as those levels stand, you see that a lot of investors are actually buying into that space now.
Not long ago that the NGX group is set to reconstitute their board. Can you give us shed more light on that, on what investors should expect?
I think it's a breaking news. I think we need to wait to see what happens.
Assume that because we're getting wind that some new people are going to be coming on board, but we'll wait and see, as you say, later in the day when the meeting, ends. Yes. So thank you so much, Abdul Rashid Momo, trader at TRLW Stockbrokers, for sharing your thoughts and perspective on the program.
Thank you.
So, Ini, that's how it ended for the equities and the listed markets.
That's a conversation about the NGX reconstituting its board is going to get a lot of attention.
Yes, definitely.
And I think it might make a good conversation for capital
markets. Definitely, yes.
Mr. Momo did say that it's breaking. He needs. I think
we want to wait and see.
Maybe you broke the news to him. He has to go back and check. So by Saturday, we'll have more information, and I'm sure we'll have more to give our viewers on that issue.
Definitely.
Thank you so much, Will.
No worries.
All right, let's take a break now. After the break, we head to the crypto space. Ladi is already standing by. Let's see if that market is doing any better. After the break. It's crypto time now on Business Morning, and we have Ladi Williams. Hey, Ladi.
Hi, Annie. Back to fear.
Back to fear, yeah, obviously, because the dollar is surging again.
Yeah, but it had kind of a little pullback this morning, so I think that's giving some kind of breather.
Okay, that's why we have 20. That's why we have. Yesterday you had 20.
Yeah, it was extreme fear, so it's an improvement. We'll take that, today.
I'll hold my breath.
Yeah, this market is not interesting for now, but let's just make do.
No market is, except the dollar market though. The dollar market is interesting.
Yeah, cash is really safe right now. Let's look at the markets now. Let's see there, 22 points there, fear. Better than what we had yesterday, extreme fear. Let's look at the market cap for the crypto market, showing Bitcoin and the altcoins there, 936.86 billion. That's up about 2.16%. We're seeing an uptick this morning. Volume is down. When volume goes down, it means it's not really convincing what we're seeing in the market at this point. Bitcoin dominance, 39.62%, up about 0.33%. Let's look at the price of Bitcoin this morning now. Let's see that. $19,383. We saw that bounce yesterday after the Bank of England announced buying back, some of those bonds. So the market actually took that well, and we saw the bulls in the crypto market actually get some buying there. $49.89 billion as volume traded in the crypto space there for Bitcoin. Let's look at Ethereum now, the king of the altcoins there. Also got a bounce yesterday at $1,330, but it's down about 0.38% this morning. Volume traded $16.83 billion. Let's go to top alts by market cap. It's still all red though, but they all had bounces yesterday with Bitcoin and Ethereum. So we saw all of them get that nice bounce, but we're seeing a pullback this morning. Cardano there, 0.32% down at 43 cents. And we see XRP. XRP is trying to get on that bull run after surging from about 30 cents. And now we're seeing it at 43 cents. Did get to about 50 cents. It's having a pullback. Some bulls believe it's going to continue. Some think the party is over, but we'll see what the XRP army can do at this time. Let's move on now. We see our top 5 gainers there. We see HNT there topping that counter. They did get that partnership with T-Mobile in the US for their telephone network there, and we see that actually surge in price there. We see the traders actually like that news, and you see the price there surging about 10%. So double-digit gain we're seeing for HNT. Then we see SNX. All right, let's bring in Amari Sachet now, eCash creator. Let's have a conversation about what's happening with supply of tokens in the crypto space. Great to have you, Amari. It's been a while.
Hey, great to be here.
Right. So, Amari, we're talking, when you go on CoinMarketCap, you see most of these cryptocurrencies. They all have, supply, different number of supply. We have some with total supply and maximum supply of most of these tokens. And we see eCash there has about 21 trillion tokens. And we see Bitcoin, 21 million. That's all that can be minted. And I'm wondering, how does this supply, play into price action?
The supply itself doesn't change very much of anything. What matters is that the supply is fixed, because when the supply is fixed, you know that the currency cannot be inflated, by various events. We've seen that over the past few years, especially during the COVID times when they were locked down and everything. Government printed a lot of money to subsidize the economy to keep going, and now we see high inflation. That's the result, a couple of years later, of the measures that have been taken. So this is not possible in Bitcoin. This is not possible in a variety of different cryptocurrencies. And so in that sense, that matters quite a bit for people that want to hold long term.
Right, and some would say 21 trillion is quite a lot of coins there for eCash. Well, what is the advantage of that amount of supply?
It doesn't change very much from any other numbers. What matters is that it's fixed, but there is also a practicality aspect to it, right? Because when people use BTC, for instance, and they want to do money transfer or whatever, very often they have to send like 0.00657 BTC or something like that, right? Because common price, one BTC is 20K in dollars. And so if you buy something that is $10 or something, you're going to have like 0.000 something BTC to send. And that's not very convenient. We're not used to speak in those terms, whereas we are more used to manipulate larger numbers. And so when we switched to eCash, at some point we decided to change the denomination and move the comma to the right so that the numbers are, easier to manipulate on a day-to-day basis.
I'm quite interested. We know, a lot of teams, end up having to burn, some of these coins, when they have, quite big supply. And I've heard chatter on social media. Some moon boys are asking you to actually cut down your supply. Is that ever going to happen?
No, at least I'm not going to burn any of my coins. Yes, people who burn their coins, they reduce the supply, and so they can create demand on the short term until supply and demand equilibrate again. But think about it, why are they burning their coin? Because they know that they are worthless, right? That's really what they're doing. People who burn their coins, they signal to you that they consider their coin worthless. So I would be very worried of investing in any coins for who the people, who are created the technology or whatever are burning them. That's a really bad idea. They're signaling you that they don't value anything that they've been built. So they want to create, PR event or stunts to get the attention of retail investor and dump on them. That's what they're trying to do.
Quite interesting, because we see a lot of teams actually burning coins at this time. But let's move on to, some market conversation now. Do you think we're close to the bottom in this market? Because, some would say there's still more pain ahead. We're seeing a couple of relief rallies, in this bear market. But do you think we're still far from the bottom, or are we kind of close?
My position is that we're going to go sideways up to the end of the year, and the bottom is, somewhere between now and the end of the year. It's very difficult to predict exactly, right? Because you don't know what company is going to go bust or, whatever. You would need to have the internal financial information for many companies that, most of us don't have. So it's very difficult to know if this is the bottom. But, if we look at price cycle, should expect the bottom to be between now and the end of the year. So right now, I think is a good time to accumulate. A lot of people are doing that. If you are looking, if you are looking at investing for, I'd say like the long term, maybe like 2 years, something like that, then right now is a good time to start accumulating.
Right. That's if you have money to buy the dip, I guess. Thank you so much, Amari. Always great to talk to you.
In those times, it's it's a big question.
Yeah. All right, Amari. Thank you so much. Always great to talk to you.
Thank you.
All right, now let's flip on and see what's, okay, top 5 losers there. We see Quant there. It's down about 5.29%. It's Celsius. It's down about 4.32%. And we see that Link, Chainlink, I'm sure the Link army must be accumulating at some point now, but it's down about 3.22% at $7.73. And we see RSR back on the losers counter all over again. So now, that's how the market is looking today. Not so bad, but there's still fear.
Yeah, Amari says the bottom line is down there.
Yeah, so it's all about finding the bottom now. If you can find the bottom in any market, you'd be some kind of genius.
I hope there's a bulb that'll just come up to say, "Ding, this is the bottom."
This is the bottom. And we just go right in with all those traders.
All right, Ladi, thank you so much
You're welcome.
for analysis from the market. And that's where we draw the curtains on the program today. It's been a knowledgeable, interesting 55 minutes. We'll have another one tomorrow. But at 1:30, Will Ibong will be here to give you update from the world of business. That'll be during Business Incorporated, so do join in then. From me, have a profitable business day. I'm Ini John McQuarrie.